Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that the market held above 13.5, which is already a very aggressive area of support. And then on the upside, the market made a marginal new high into 1875. Heading into the open, we know that the buy side is in control. The buyers are dominant across multiple time frames. But the challenge of this market is that the upside potential from here could be fairly limited. So even though the buyers are dominant, there may not be a whole lot left on the upside. And in order for the market to continue to push to higher prices, we are going to have to see continued and sustained upside momentum. So simply a lack of momentum at these higher prices can be enough for responsive sellers to step in and at least for us to see some level of profit taking. So we do need to be cautious on the long setups up here. At the same time, we need to understand that the buyers are dominant, so we do need to see at least a lack of strength if we're going to short this market. Now, as day traders, we can take trades on long side and the short side, irrespective of the overall trend. But in order to short the market right now, where it's in such a bullish phase, we do want to secure good trade location and we want to avoid any aggressive shorts. So if the market has already moved, 6 to 8 points on the downside, then you don't want to enter short at that point in time because the market could be overdone and due for at least a small bounce. So on the short side, we do have to be certainly more cautious, more careful, and more selective. But it doesn't mean that we cannot take short setups in this environment. If the market gets exhausted into an area of resistance, or if we're seeing signs of weakness in real time, then a short setup could still be justified because it wouldn't take a whole lot for the market to pull back to 11.5 to 13.5, and even 06.5 to 08.5 is not really all that far, and it would be a very minor retracement given how much the market has moved to the upside. Now, beyond the 17.5 to 19 area, we have to keep in mind that there is no hard resistance. The market would be making fresh all-time highs. The resistance zones above are based on the range expectation on the day. So in the event that we do have sustained upside momentum, the 23 to 24 area could very easily be tagged. It's very much within the minimum range potential of the day. And then in the event that we start seeing a bit of a pickup in volume, or we are seeing sustained upside momentum, the market could get exhausted by the time it reaches 27.75 to 29.75. But 23 to 24 is very much possible today, but we would have to see that sustained upside momentum on the NYC tick. Now, if we fail at 17.5 to 19, then 11.5 to 13.5 is the easiest zone to test, of course. But if we're failing at 17.5 to 19 and we're heading down and now we're seeing some clear signs of weakness, or as the market's going down, let's say the advanced decline line turns fairly negative, then even pulling back to 06.5 to 08.5 wouldn't really be a big deal. And at that point in time, we could start seeing buyers stepping back in. So 06.5 to 08.5, and then if we push lower, 02 quarter to 04 quarter, those are good enough areas to look for long setups on first test. Of course, 02 quarter to 04 quarter is more conservative trade location, and it is a higher probability zone. But even 06.5 to 08.5 has potential to hold as long as we're not seeing any major signs of weakness in real time. So those are the main ideas heading into the open. Let's see how the market responds to 17.5 to 19. Again, keep in mind that we are going to have to see continued upside momentum in order to go higher, and simply a lack of strength at 17.5 to 19 could be enough for the market to pull back at least to 11.5 to 13.5 and possibly even 06.5 to 08.5. So let's see if the buy side can continue to be active, and we'll take it from there.